In this video, we're going to talk about SolarEdge, and you know you're in a risk-on environment when solar companies are starting to get upgrades. Yes, I realize the Dow was down 1,000 points the other day, but again, with interest rates getting cut, it signifies more helicopter money to chase risk assets. Now, before we get into the analysis, and I confirm and show you why the bottom is in on SolarEdge, let's get into this article, as SolarEdge got upgraded recently by Goldman Sachs to a buy from a sell on early signs of a recovery and the company's shrink to grow restructuring strategy, which is expected to stabilize its balance sheet. Goldman noted that investor fears over SolarEdge's liquidity and its ability to address the $300 million debt due next year are overblown. The company's ongoing cost-cutting measures, including headcount reductions and operational efficiencies, are expected to alleviate its free cash flow concerns. This, combined with improving product mix, could provide a near-term boost to margins and earnings. Now, the brokerage also highlighted broader growth trends in the solar market as supportive of SolarEdge recovery. Goldman expects to return to growth in residential solar installations in 2025, particularly in the US and Europe, which are their key markets. Now, even with near-term challenges from policy uncertainty and competition, Goldman sees SolarEdge restructuring efforts as a turning point. It sees an improving earnings momentum by late 2025 with a sharper acceleration in 2026 as cost efficiencies take hold and demand stabilizes. Goldman also views current valuation attractive with significant upside if execution improves. Yes, it's attractive because prices are at near and at all-time lows. Prices are trading at the lows once visited back in November of 2016. And for those who remember, this was when Trump was elected, and you can see price was off to the races. Again, history tends to repeat itself, and so the charts are suggesting you're going to get some type of this trajectory, again, when price is going to bottom and then move higher. Now, what are the key levels to pay attention to? Let's go down to the, I'm going to take this off the chart. Let's go down to the weekly chart. So yes, price continues to move lower. It continues to respect this 13 simple weekly moving average. However, when I show you on the daily, the momentum to the downside is waning. And your first visible sign that price has bottomed, you need to see a candle close above $20. That was simply where we last had support, and that became resistance. All right, now here's where you know prices are bottoming. You have price making lower lows, but on your momentum indicator, in this case, your RSI, which is the relative strength index, it is making higher lows. So this is called divergence. And again, this is the level that I'm watching, as that was the last major level of support before price eventually broke it, retested it, and then had the next leg down. Now we're going to have this type of motion. Price could make a lower low, but then you should look for price to take out that pivot high en route to the $20 level. So when you scroll out to the weekly chart, this is what we're looking at. Again, if price makes a lower low, that's okay, because on your RSI, you should see a higher low being made. Again, confirmation. You also want to see some high volume. That would be another confirmation. You want to see the blue line cross over the orange line. That would be bullish as well. So if you can get above $20, look for your next target to come in at the $40 level. Thanks for watching. Subscribe. Please like the video.